Hello and welcome to this interesting conversation on rethinking the area of risk and compliance and frauds in the financial services sector. Today's conversation is on rethinking financial crimes and compliance. And we are really honored to have LexisNexis as our partner in this conversation, which is going to share with us some very, very interesting gist of a report which they come out with every year on financial crimes and frauds and the overall total cost of compliance. May I request our honorable members on the panel to introduce themselves. May I start with Vijay Lakshmi, please?
Thank you, Babu. So, hello everyone. Good afternoon. I'm Vijay Lakshmi, General Manager in charge of fraud risk management in State Bank of India. So, we deal with fraud risk and fraud prevention and monitoring also of reported frauds end to end from the time a fraud is declared or decided or identified. From then on till some kind of a resolution happens, and we get this data moved into the archives. So it's almost an end-to-end kind of a thing. So very happy to be here with all of you, and thanks for the invite.
Yeah. Good afternoon, everyone. My name is Darshit Sheth, and I work in the capacity of Principal Officer for Thomas Cook India Foreign Exchange AML and Compliance.
Yeah, hi, good afternoon, everybody. My name is Pramod Rao, as Babu mentioned. I head fraud risk for Axis Bank. And when I say fraud risk, it is for the entire corporate, retail, and all the businesses for the bank. So in a way, just like Vijay Lakshmi mentioned, so this is more like an end-to-end fraud risk management that we undertake.
Good evening, everyone. Thank you for a warm welcome, Babu, and very good evening to all my fellow panelists. Such an eclectic panel. I am the Chief Risk Officer for India First Life Insurance Company, a company promoted by Bank of Baroda and Union Bank. I head, apart from risk, I also head internal audit, fraud control, and legal.
This is Manish Agrawal here. I'm part of a fraud risk management team in the HDFC Bank. I'm with the bank for last close to 2 decades. Wow. And I have always been part of the credit risk and vertical. So I'm very happy to be part of such an elite panel here, and I'm sure that we're going to have some interesting discussion. Thank you.
Wonderful. Thank you. Thank you so much, Manish. Let me introduce you, Ajit. Ajit is heading the BFSI practice at LexisNexis, and he is going to share this interesting report with us. Ajit, over to you.
I'm Ajit Pillai, part of LexisNexis Risk Solutions group, responsible for financial crime compliance portfolio in India. For the ones who are new to financial crime compliance, or rather LexisNexis Risk Solutions, we help organizations transform the way they make decisions about risk and opportunities by leveraging data and advanced analytics. Without further ado, I'll quickly jump to the first segment we spoke about, which is launching one of the most awaited research note this year, True Cost of Compliance and India Perspective, which we are excited to share. And I would share, in the interest of time, few key takeaways from this pertinent study. And if you would like to have access to the complete report, you can see my email ID on the screen. Please drop a note to me, and I would be happy to arrange that at the earliest. From the participation point of view, it's mostly financial institutions who have participated, such as banks, investment firms, asset management firms, and insurance firms. And the respondents, we ensured that there's a mix of decision makers as well as operational team, so which includes within the financial crime compliance, such as KYC remediation, sanction monitoring, financial crime compliance operations. So it's a good mix to get authentic information that can be turned into actionable insights, to be precise. The average cost of financial crime compliance per organization over the years has increased significantly, especially since 2020. And what we have observed, labor continues to account for the larger chunk of it. Now, as per the study, the total projected cost for financial crime compliance across financial firms in India is around $6.85 billion for 2022. And we are looking at a 24% increase over the pre-COVID period in 2020. So we have placed these findings in 5 pillars, just for the comprehension. Over fifth of or fifth or one fifth of spend has been attributed to training of compliance staff, which could be a combination of new hires or new technology investments. And our study also has observed, and even through interactions with CCOs and compliance leaders across industry, majority of Indian banks indicate hiring additional compliance staff since the pandemic, which includes both the entry level as well as those with a few years of experience. And I'm excited to hear more from the panelists who would be able to validate that as well. And organizations or larger firms with higher volumes of new business accounts per month have increased their staffing to deal with increasing compliance regulations, particularly since, especially if you notice now, the corporate structure, which is getting more complex when you try to demystify the business family and also the need for identifying ultimate beneficiary owners. Naturally, sectors involving, now coming to the second point, naturally sectors involving payments and third parties are ranked as high risk for money laundering. This includes e-commerce and retail, as well as legal services, where professionals, and I'm sure most of the audience would be able to resonate, professionals can lend perceived legitimacy to a fraud or otherwise illicit transaction. Now, as organizations with higher volumes are particularly seeing increased crime related to money mules, trade-based money laundering and corruption or / bribery through the supply chain as well. Now, in the last 7 to 8 years, especially in India, with the internet penetration increasing, the rise in new typologies and especially around the online mobile shopping in India has led to a growth of payment gateways that criminal target for faster and more anonymous transaction laundering compared to doing so through traditional offline transactions, right? The point number 3 that we're looking at in terms of knowing more around the challenges on sanction screening or could be alert resolution. When asked to rank top 3 screening operational challenges in 2020 and last year, the majority of financial institutions combined it around KYC for onboarding and risk profiling for the customer. There is less consensus now, especially with similar percentage rankings across various challenges. This kind of indicates to us that the difficulty organizations or compliance leaders are facing to narrow their challenges just to top 3, because there are new threats and new typologies coming in the market. And this happens simultaneously as regulatory reporting and alert resolution have become more complex, challenging, and even PEP identification remains among one of the top issues. So there is, our observation has been there is need for better KYC data and analytics, particularly for those onboarding more complex business organizations to easily create a single risk view and direct or indirect relationship, establish direct or indirect relationship of a business with other entities. So this kind of compounds challenges with maintaining an audit trail as well. So that's our observation that we see. And once you review the report, there are more data and analytics to highlight that as well. Now, the fourth point is quite evident, and I think it's common sense, I would say. Everyone, all across the industry, everyone has felt the pain and the agony that the challenges. The ongoing pandemic has negatively impacted productivity and compliance capabilities, because one of the examples that I can think of is alert volume has increased significantly, which has led to increasing TAT for, as a bank, as an insurance company, the onboarding by creating frictionless customer experience, that has got impacted significantly. Now, organizations are taking longer to clear those alerts and complete the due diligence, especially where corporate accounts in which AML screening or transaction monitoring can take multiple days to clear. So this is linked to multifold challenges. Could be maintaining an audit trail, could be getting a single risk view of a business, the complexity and broadness of KYC data. And one of the key elements that we hear from our customers is lack of a standard registry for foreign business data. Now, coming to the last point, I'm sure there would be a lot of questions during our Q&A at the end of the call. Organizations that have invested more in technology have reaped apparently more benefits. And what I mean by that is that um, to support financial crime compliance efforts, if organizations have pumped in emerging technology or funds allocated for that, have experienced significantly lesser cost impact than those who have invested less in technology. And I'm referring to long-term benefits. And our report indicate more detailed numbers in terms of how companies have reaped those benefits in different forms. It could be greater efficiency, which can be realized among the ones who are investing more. And also few banks or few firms that we are aware of who have started in doing this activity around 2018, 2017, 2019, they have had lesser pandemic related challenges compared to the others who have cited more. So that's the snippet of this of key finding from this report. Now coming to the key takeaway, the first point, as you can see, it's a no-brainer that everyone is going through digital transformation and it's at the center, core center. And what we have observed is there is no one solution that fits all approach to detecting and mitigating financial crime. It requires a more sophisticated, multi-layered solution approach to mitigate risk and ensure compliance as well. There is a linkage between COVID-19 pandemic and increasing compliance pressure. Yes, of course, there is a significant linkage. As a result, firms need to remain extremely prepared for this increased risk and cost associated with financial crime and compliance. Now, coming to the third point, which may look very prominent, skilled compliance professional, they continue to be in high demand because of several reasons. Now, automation, for instance, should be built into the due diligence process, particularly at KYC onboarding. So using solution to help teams analyze existing data, having access to other external information, and make decisions from a holistic view of the customer that can reduce onboarding times and decrease remediation cost. So there are several factors which needs to be looked into very closely, and technology does not need to replace human involvement. It can augment to improve compliance processes and reduce the need for bringing additional resources.
The second last point of what Ajit is spoken about the investment into talent and into the technology. So if you see this interesting concept of the cost of compliance increasing day by day, and especially in the recent past, the regulators have been putting in more and more compliance norms in place. So how are organizations looking to balance it with aligning people and technology together? I think, can I ask Vijay Lakshmi to share some perspective from a PSU bank's perspective?
Yeah. So to continue what Ajit said and what you also started off the ball rolling, I agree with the one another point that Ajit made, that the technology investment has helped institutions to probably reduce the severity of the impact. It brings to my mind the impact of the COVID vaccine. Those who got the COVID vaccine taken probably had a lesser severity of the disease, or maybe a lower level of fatality. So the technology part is the investment required, and the kind of technology and the intervention point at which we are introducing the technology. These become very critical points, that we need to take into account. It's not just that, we buy a technological solution and roll it out. We should know where to place it and when to place it. So there are a lot of repetitive jobs that people manually are doing, where I think the technology plays a very large role in reducing the need for the operating level staff to have to apply their thinking at all. So I'll just give a very small but a very significant example that has always struck me. During one of my visits to US location, I went to a store called Target, and I bought something for $9.25, and I gave a $10 note. The lady at the counter, and I gave her 25 cents extra, thinking that it would be easy for her to return $1 to me. She refused, and she said, please do not confuse me, because I will ask the system what I should pay you back. So she just, input those numbers, and the system told her, take the $10 note and return 75 cents. So she did that. But I felt that that was a very significant automation of a manual process where the necessity of thinking at a very basic level is reduced by programming it into a cash dispensing point where the volume is very high and where the individual's thinking may sort of derail the whole process. So probably we need technological interventions in such high volume but low value points where the manual part of the process is also supplemented to a very large extent by the technological thing. So this we have seen in our own bank where we are using the YONO as a channel where a lot of things are getting integrated. So it's almost become like a digital bank or a virtual bank where YONO does a lot of the functions that a person and a technological system does together.
Perfect. Excellent. Darshit, what is your thought on this area about people and technology intervention into compliance?
Babu, my insight is that definitely there is a subjective call that needs to be taken. The automation does play a role in deriving to a particular conclusion. But from the organization standpoint, a subjective call needs to be taken where we have to derive what to do next after the output which the automation has given to us. So there where, it helps us when it comes to a real-time screening. It helps us when the screening solution providers like LexisNexis have their product imbibed into the organizations, which gives the automation to play a key role in terms of deriving the subjective decision for the compliance or for the fraud risk team. I think as Vijayalakshmi Madam correctly quoted with an example of the process that has to be imbibed and how useful or how well equipped we are with the process to adopt. That's where the key lies, and that's where subjectivity comes into play.
Excellent. So let me ask Sundar from an insurer's perspective before I jump to our private banker. Sundar, what is any thoughts from you in this area?
Thank you very much, Babu. We speaking about compliance. Okay, so let me make a controversial statement. Compliance empowers us. Okay, and typically compliance is looked at as a restrictive phenomenon, but I would believe that compliance actually empowers us. Okay, let me elaborate a little more. What is compliance? Okay, so compliance of law of land, of some board policy or an SOP. Why are these created? They are all for protecting interests of all stakeholders, ensuring that it is a going concern, ensuring that there is a healthy bottom line being made, and so on and so forth. So why treat compliance as getting a compliance officer, getting 5 qualified guys, getting 3 fancy solutions, and lo and behold, we are a compliant organization. Okay, that doesn't somehow work, right? It has to seep into our DNA. It has to seep into our each and every process. So if each and every individual, each and every SOP, each and every technology intervention or solution intervention, is structured such that there is compliance in spirit and not necessarily in letter, then it works.
So only point I would probably add is to what Sundar mentioned and probably take it a little bit further is, I think we also do not make enough effort in organizations to explain the rationale of why compliance. So like you rightly said, it has always been painted as a negative force or not an enabling force. And what ends up happening is that you have the gun on the head and, people think that, we have no choice because whether we say something, he will put the regulator's name in front and therefore we have to do it. I think we also need to take a step back and kind of try to articulate within the organization or create that kind of a positive influence or culture to make sure people understand the whole ethos of why we are doing this. I mean, at the end of the day, let's face it, I mean, we are dealing with public money, right? And therefore the money that the banks manage or the institutions manage are all collectively our money. And imagine if somebody loses today also 20,000 on a phishing fraud or something like that, you can see the pain that people have, I mean, and angst that people have, and rightly so. Imagine if if we can give the same kind of a feeling to people to say that this is why you're doing compliance, that if we can equate that pain to why compliance is required, I think that will, I just kind of strengthening what Sundar said.
That is where 1/5 of the training cost is going to be put into, according to what LexisNexis says. Any quick one for you, Ajit?
Yeah, I think fantastic views, and really happy to hear industry leaders sharing their thoughts, especially the statement Sundar and Pramod on communication, and Sundar stating compliance is the game changer in a way. I just had a 2 cents to add to it based on observation that we hear from people. The cost of compliance can prove to be exorbitant unless you manage it proactively and efficiently. Like, it's a delicate balance, right, between minimizing violation and fines on one hand versus reducing cost involved in it. And most importantly, the business wants to hear the potential business opportunity loss. Coming to Pramod's point, if you are able to link it to a quantified to potential business opportunity which is lost, there would be a mechanism and buy-in from all stakeholders. Now, the cost can be in terms of technology, people, or sheer investment of board's time and effort. Now, just 3 components that I can highlight without jumping too much into the detail. One is, how do you supplement compliance into the process that it becomes a BAU for everyone? It's like a culture. Somebody wants to be fit, wants to go to the gym, should not be once in 6 months, right? Every step should have that common vision. Second is about leveraging data. You have so many ways of getting fragmented data, unstructured data. How do you use it to your strength to give your business team a competitive edge? Bringing me back to the third point, what we get to hear from people across industry is that compliance can be your competitive edge, and pandemic has taught us that. Some of the firms who took those first step towards investing, it could be influencing process to create efficacy or effectiveness. If adopted right, compliance could serve as an edge for you as a competition, and first mover advantage can be brought in. So yeah, that's a point that I want to highlight on a positive side.
Fantastic. What are the new fraud challenges that organizations are, today coming across, or what are those new perspectives that you are seeing in this current situations today? Let me start with Manish. Manish, what are your thoughts on this?
Hey, thanks, Babu. So, couple of points on this. First thing, you use the word standard. So I would say that regulator has worked very hard on this particular piece, and they have come out with a DPSC circular, okay, which makes it obligatory on the part of a bank to ensure that all those points that they have detailed out, the compliance becomes the must. So these are not the good practices of the advisories. These are taken a route of compliance. And regulator is following up very, very closely on each of these parameters to ensure that certain basic standards are set. So we have to understand that India is going through a revolutionary phase. The digitization which is happening in India, nowhere is taking, in the world, nowhere it's taking in a shape the way it is taking in India. So it is very, very important that a certain minimum parameter is set. And I think that regulator has taken the task on his head, and we all are supposed to comply. So that's the point number 1. Point number 2, if you ask me, today you can categorize the fraud into multiple verticals or buckets. Okay. One is from the payment transaction perspective. Second is from the loan origination perspective. Within the loan origination perspective, you can break them into a high ticket size as a corporate loan and a retail loans. So these are the 3 basic fields which I'm talking about. Each of them have a different challenges, so as to say. Okay. The good thing on if I come the last one, if I take the first, which is the higher ticket size corporate loans. So we have seen the reports recently published where the banking system as an ecosystem has seen a reduction. But that's a one story. If you talk today about the payment ecosystem, and here today the challenge is a social engineering. So today the frauds which are happening is not happening because somebody's ecosystem has been hacked. And I'm talking about an ecosystem. I'm not talking any specific to the bank. Okay. So it's a social engineering which is coming up and which is playing a critical role. And that's where there are companies who talk about the behavioral biometrics, adaptive authentication space. Okay. There, we have to up the ante. That's plain and simple. And identity, if you talk, it's a virtual identity today. Okay, the virtual identity in the form is that ultimately it's an individual is not waiting individual to check the identity. It's the device and a SIM and your fingerprint which is getting authenticated through Aadhaar is, everything for the identity. So these are the, you can call it a challenges also. And at the same time, I will call them the opportunity as well. Okay, as we know that what needs to be corrected and what needs to be mended.
An insurance perspective, so there anything quickly different, a quick short one that you want to share from an insurance perspective?
Sure, Babu. So by and large in life insurance, I'll not touch upon general insurance. The opportunities are very divergent and different. But in life insurance, predominantly it's claims related fraud. Okay, but how it has changed over time. Okay, there was an era where we talked about somebody taking a small premium policy and having a large claim out of it. Okay, and then they got smarter and they said that, okay, we'll take a small premium policy with a small value claim, small sum assured. So it doesn't, it passes the smell test at the entry stage. Okay, and then they've got even more smarter. And then they say that now we will enter and pay premium for a couple of years. And, regulator now allows that if 3 premiums are paid, then you have to end up paying that claim. So we'll use that as a enabler, and then there is even more, then there is a mix and match of all of them. One more thing which I would just want to leave a statement for everyone is there are what I would call as BAU fraud and innovative fraud. And, the innovation keeps happening. So you need to manage both, have some process to manage and overcome or even predict, BAU fraud. And innovative fraud, try to overcome it as soon as possible, as soon as you discover it. And maybe, that's the way to have a one-up. You have to stay one-up. It's like, it's a chore police game.
Just to add to what Manish had said earlier and to some extent what Sundar is saying. So when, fraud management was not really that entrenched as a function, there was this time when, it used to be docked under a internal audit or a compliance team or a operation risk team or something like that. I'll give you, another example that struck me is that when prior to OTP getting implemented, we were all looking forward that, once OTP comes, fraud is going to diminish or fraud is going to get eliminated. And we all were very, pumped up and said, wow, we're looking forward for that era. But what happens once OTP has been launched is something we are seeing is completely changed. We talked about, Manish talked about social engineering and, the chore police game. In fact, it is taken us to a worse position than the pre-OTP situation, as you see.
Great. So any other thoughts from Darshit or Vijay Lakshmi before we proceed to the next question?
Yes, Babu, just a quick one. In an organization like Thomas Cook, to be a complete devil's advocate, the fraudster has an opportunity to undergo a fraud or to fraud a customer at various stages now, being digital payments and online on a revolutionary side in India. So to give a layman example, if a customer is traveling to a particular location due to a corporate or a leisure booking, the ticketing is online, the hotel stay is online, the currency FX procurement is online. So, as a fraudster, I have various opportunities if I want to, get into a fraud. And the identification of a fraud, whether it was done by a fraudster externally or whether it was identified at, as an employee fraud or a staff fraud, is something where, the consumption of time, effort, and understanding the case plays a major role.
One small thing I wanted
yeah.
to add to this body of conversation is the fact that we need to identify the place where we'll trade off between the customer convenience and also be able to stop the fraudster. What I always keep thinking is that whenever we launch a product, we are very vocal about publicizing that, I have this product for you, I have this service for you, so I have these features embedded in the product or service. So we are proclaiming to the public at large that these are the conveniences we have, and we are all the time focused on the business client who will use the product or service. We are not looking at the fraudster who is also in the same public body and who is also looking at the features to see which feature probably has the highest vulnerability that he can exploit. And along the way, I think when we are designing the product or when we are marketing the product, we are not marketing it to a fraudster at all. But I think we should, have that thing in mind all the time, that we have the fraudster is part of our marketing audience, and he is listening to us more closely than the potential client. And he's probably looking at, ways in which where can he enter and, exploit, target the institution or the client, whoever comes.
So how are organizations today, protecting themselves from the issue of compliance and hidden risk in a world of real-time transactions, especially when they are dealing with fintechs today? Any interesting examples you can throw?
The whole community or ecosystem of fintechs has become a necessity now. And why has it become a necessity? At least, the BFSI segment, for example, we have a lot of huge investments in technology through legacy systems. For example, most of the life insurance industry uses, let's say, a policy admin system called Life Asia, which is, similarly, Finacle is used across banking. So any change is not easy. It's difficult, right? And it's difficult not only to bring in, by way of investment, but also by way of change, and by way of change in people using the systems, which is where fintechs come in. Okay, so they don't have that baggage. Okay, and they can look at one small element and do it as a gig, and then get it running. And then, one large problem gets broken up. If, let's say, a BFSI company can break it up into multiple small problems and assign it to, let's say, 3 or 4 fintechs, clearly the pace at which we can sell, service, and sunset the customer becomes very, very dynamic.
So, see, like Sundar said, what do they stand for? They stand for nimble-footedness and being innovative. These are probably 2, very important traits that a fintech brings to you. Having said that, I would compare them to any of the new digital companies or the new .com kind of companies, because they don't stand for processes, or sorry, that's not the right way of putting it, but they're focused on achieving innovation and bringing it to you, like an Ola or somebody else. What happens is the banks are caught in the middle, because the banks are not nimble-footed and takes time because of legacy systems and so on, which Sundar mentioned. It's extremely difficult for banks to transform and deliver something in a let's say a 3-month period or a 4-month period, whereas the fintechs are people who can do it. So the biggest question that is there in front of the banks is how much of engagement, what is the right level of engagement that they should have when it comes to fintechs. And it's very difficult to draw that line between where you are, because you are a regulated entity. You have to take care of all the compliances and everything that are there for you to comply, but they don't need that. but they also are willing to do business with you. And if anything goes wrong, the regulator is going to ask you, because your banner is out there along with them to say that no, this is being co-powered by somebody XYZ and so on. So it becomes a very difficult conversation, or a difficult line to draw as to where does the bank process end and where does the fintech take over.
Actually, I'd like to only sort of, add on to what Sundar has already said, that the eternal question of, whether you'll make or buy, whether you'll do it in-house or outsource. I think we just need to look at fintechs like partners, absolutely, because sometimes if the fintech has a better agile model, like Pramod has said, and it has a better, connectivity, it's fine to partner with them, and that process, that part of the process can just be sort of, gone through it, subject to the compliance standards that are agreed upon and that meet with the regulatory expectations, and also take care of the security aspects. So as long as that happens, probably it is lesser investment in technology for the bank, and it is more of only the interface portion that needs to be strengthened, so that there is no pushback again back to the institution. And the roles and responsibilities and accountabilities are absolutely defined, and it is easier. So fintechs, I think, is actually having they probably need to be encouraged, because they are focusing absolutely on the creativity element and the speed element being brought in. So we might as well leave that space to them and then find a way to increase our business going through them. So it's a win-win for both.
I think beautifully covered by everyone put together. The only aspect I see, it's very similar to a marriage or a partnership between organizations wherein you lean on each other's strength. So what they bring in, speed as their delta, or it could be innovation, creativity. And what as a bank you can lend is your expertise over the years in knowing the regulators well, having those core systems to do AML checks and all of that. Now, the important element that we hear from the customers these days, there are many partnerships which are on table, which are yet to materialize purely because of the amalgamation or probably alignment, which is yet missing. The one area that bank is trying to identify, or the difficult part, is what is the cost of the compliance for those, because these are low ticket items and different personas who may be not the right customer for the bank at this moment. Could be a youngster, could be a new entrant to the market, new to the credit. So how do you determine the payment cost? What percentage of cost will arise out of AML operation? How many resources required? So once you fine tune that and then build it, as everyone mentioned, as part of the process, a BAU, and not label it as a compliance function only, then it kind of gets aligned with the vision of the bank or the firm that is trying to do this partnership. Yeah.
Excellent. Let me go to the next question, where Vijay Lakshmi already touched briefly upon, is on the frictionless security, where the security need not be a friction but an experience. Okay, and we are talking about very minimal intrusion and intervention into the customers, but maximization of the compliance. So from that perspective, what are some of the new things that you have seen in the last few months time, or maybe going into the next few months? What are those interesting strategies you have seen which is not seen in the recent past?
I think the paradigm shift which has taken recently is the awareness that has been spreaded between the customers when it comes to product procurement or to abide by the compliance rules and regulation, and that has reduced a friction in terms of reluctancy when it comes to sharing of particular information which is as per the local regulator norms and guidelines. So the awareness, which was something which was missing, if I can say, 5 to 7 years back, but now, because the compliances, the fraud risk management is playing a key significant role across the industries, even the customers are becoming privy to this importance of having this as a part of their own safeguard and security.
So if you see the example that we have seen of a frictionless innovation, I would say that UPI is a great example. Okay, if you see that, it's a very, very simple thing. What it has done, it has bound your SIM and the device with an app. Okay, so that the security is of at a different level. So that's one thing. Second thing, if you talk that, what kind of innovations which are going to happen. So we are anyway in a process. So this SMS OTP that we talked about, okay, in a time to come, it is going to be a thing of past. There is going to be a multi-factor authentication. There is going to be a silent authentication. Okay. There are various network solutions which are already in place, which have come in, which does not require you to put in an OTP. I'm just talking it from the innovation perspective, and I have taken this example. Okay. So it's a matter of time. How do they kick in? Definitely, while we will kick in all these things and bring in all these things, the fraudsters must be thinking that when they come, how do we ensure that we move to a different level? So it's going to be a game. But I think the India has a very, very positive story. Everybody has its feet on the ground.
On one side, organization needs to have an end-to-end clear picture about who is behind the transaction and what kind of information is required. So, and what kind of associated risks would come along with that. So you devise that strategy. This is on one side. On the other side, people have been speaking about the role of analytics and data sciences in the future also. How are we combining all this together to get a direct view of end-to-end view of the customer, and second, at the same time, put brakes to any kind of intrusion or any kind of frauds that would happen?
I think I'll take a reference to Ajit's presentation on the key takeaways, that the customer profiling, this matters a lot in knowing who's the customer, who's the person behind the transaction. So if you know your customer and you know that he probably has transactions in the middle of the night or in the normal daytime, or he has a bunched up transactions, a series going through, or low value, high value going through, and we know the patterns. That's where we bring the AI, artificial intelligence, into the picture, so the machine can learn, and we put in a set of rules where the machine is able to validate these rules with the customer patterns, transaction patterns, and then be able to proactively be able to predict that this is completely out of character because we have a profiled customer in the database and this doesn't seem to be, or the location, the geo tagging that we are doing now to see where the customer normally is expected to be functioning from and where he's actually functioning from. So a lot of these new technological enablers have been put in place, and we are trying to expand it. Like I think Manish had made a brief reference to it about these behavioral biometrics coming into the picture. So someone's the pattern of the movement of the mouse, or the hesitation, the movement of the eyeballs between two screens, and that the phone is on while this transaction is going on. So all of these aspects together build into giving us an insight into whether it's a genuine customer who's doing the transaction or not.
Another thing is, a digitization of public records. For example, today, death records are available online. There is a death certificate which can be validated to the state government site. Elements like these can make a big difference into the future for us. And these are already, they are signaling change in even a claims payment process. For example, I'm told that in travel insurance, if let's say there is an airline delay and it is covered, airline delay intimation by the airline itself will trigger the claim. Okay, so those can, for example, if let's say all our crematoriums are crystal ball gazing, okay, if all our crematoriums and our public records corporations, who issue death certificates are connected and are in a one distributed ledger, then those could trigger the multiple insurance policies which are covered by multiple insurance companies to the nominee without a need for an application form or a claim request. There are a whole lot of claims which go unpaid because the claim is not sought by the nominee. Yeah, all of this can be overcome.
Excellent. Manish and Pramod, anything from a private sector perspective you want to add?
I think the simple thing that we can say that it is going to help us in reducing false positive. Okay. And I think that's what Vijay Lakshmi also and Sundar also mentioned. So at the end of the day, the most of the time with the fraud risk department or the fraud risk management team or a compliance team spends is on the false positives. And with the AI coming in, it is going to reduce it. So that will increase the efficacy. So this is a bigger benefit that I see in terms of a contribution from AI.
Wonderful.
Just to summarize, I will say you need to have behavior, you have data, how well you're able to
Agree.
make sense out of combining both of them is going to be the proof of the pudding. And that would take care of probably not only frauds, it would take care of false positives, it could take care of everything. So I think getting that right balance is the magic formula that we all should be looking, we are all searching for.
How do you think, what is the next step towards simplifying the process of rethinking the financial crimes?
Just to add to what the way I look at it, Sundar and the entire panelist have echoed the same emotion with regards to compliance no longer being considered as a restrictive environment. And coming to the previous point, which elaborated beautifully, going forward, knowing your customer, or rather it's already a trend that knowing your customer is not just about confirming their address or name and validate their date of birth. We have evolved now, and what we see successful organizations do currently is understand the pattern and develop a process to test validity of a transaction or a behavior. And what it means to compliance professionals or a chief compliance officer, they have a bigger contribution to do to business, because as a business head or a CEO would look at how can compliance add further value. So the benefits are multifold. One is you're with a sharper insight, you're able to detect fraud at an early stage. Secondly, you're empowering your team or your business to have a better view of the customer, to design your product, design your solution, and customize your communication. Could be about social engineering. How do you keep the customer at the center, and you work around and do the communication part, product designing, and everything around that. So that's very much possible with the new emerging capabilities we have as an industry. Now, one interesting point that I wanted to highlight, just sum it up as well, that payment processors are going to have a catch up with, like, especially now with fintechs in getting aggressive on the credit card space. It's important to know your customers' pattern recognition, management, and monitoring the exceptions also, outliers also. So unlike credit card companies who deal with formatted data, payment processors will have to deal with a much larger unformatted data collections from many sources. So determine if a customer is transacting in a particular pattern will help you evolve as a business as well. Now, to sum it up, I think the question Mr. Gala has asked, I'm happy to, because it's a longer answer, I'm happy to share it over an email. There are quite a few trends which are happening across, so I can send it across along with the report as well, which will help answer that question. So to sum it up, my view, 2 cents, is that no longer compliance is only a support function or to keep the balances in check in place. It has a bigger pie and bigger voice and seat at the table to contribute to all functions and create a synchronization across the organization.
Wonderful. I think that was very beautifully put and summarized. And as a gift to all the people who have attended this session and spoken at this session, thank you very much, everyone, for this wonderful participation. We will carry some excerpts of this conversation in the magazine also, so that everyone can at a larger scale benefit from it. And thank you very much, everyone in the audience, for attending it. And thank you, LexisNexis, for sharing these beautiful insights, and Ajit for sharing perspectives of LexisNexis. Thank you very much.
Babu and Ajit, and thank
Thank you,
you.
Babu, and
Thank you,
thanks.
Babu.
Thank you,
Thank you, everyone.
everybody. Thank you, Babu.